Good morning, everyone. Welcome to the On Time On Target Morning Brief, and happy Friday to everyone. I am wearing, instead of my traditional flight suit, I have my Longhorn gear on this morning. In case you don't happen to follow NCAA volleyball as closely as our family does, the Texas Longhorns defeated Wisconsin Badgers last night in the semifinals, so the Final Four version of volleyball, to go on to and it was a good win too, to go on to the national championship, which will be Saturday night against Kentucky. So good luck to the Longhorns. They do have a couple of national championships in volleyball underneath their belt. This will be nice if hopefully they can add to that list. All right, for our topic of the day today, it's going to be all about capital gains tax that's proposed. And when you look at the market did get hit pretty hard yesterday with this announcement. Remember, this was announced 6 months ago. It has been on his website. It's been on President Biden's website prior to the election, right? That this was going to happen. There was going to be a capital gains tax increase for those that make over $1 million. So obviously, when it happened yesterday, for the trying to get rid of that weird shadow. When it happened yesterday and it was announced, then it kind of became real, right? Then that's what hit the market almost 1% in 30 minutes or so. So you have to ask yourself the question, is this a game changer? Is this something that has the staying power to knock the market either down or make this year, flatline, or even in the year negative from where we are right now? So those are things we're going to talk about today. We're going to get into the specifics of the numbers, who it affects, and then the different forces that are going to weigh on the actual market. If you're catching us on replay, thank you so much for make sure you click the notifications bell as well as subscribe. If you want to join us live, it's $25 a month to come on into the room. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is our lineup card for today, Friday, April 23rd. I think I fixed the background there, so it should be good now. All right, make sure that you have your chat window and your Q&A window set up. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimer information available at ototnow.com. All right, what is going on with taxing the rich, right? So let's look at the numbers. You probably heard these yesterday. Currently, the capital gains rates are either zero, and we'll go over these after the market open. I'll bring up the chart and show you where we are. But zero if you make up to a certain amount, and then it's 15% for almost everybody. And then you get above a certain amount, and now you get into 20%. And then there's, of course, a 3.8% kicker that kicks in the middle of that just to keep tax law even more confusing than it already is. So you're either paying 0, 15, 18.8, or really 23.8, because kind of nobody pays 20 because of that kicker that's out there. Now, the proposal that's out that we'll see if it gets passed or not. First of all, it has to get passed, which again, it's unlikely. I think that's an opinion that it does, but Americans making over $1 million could pay 39.6 percent tax rate, coupled with the 3.8% kicker I already talked about. So quick math shows you that's 43.4% on taxes. And get this, depending on what state you live in, if you're in California, you're paying 13.3% on capital gains already for state taxes. So that gets you closer to 50. That gets you north of 55% for capital gains. So again, further, what is this? If this gets passed, again, it will probably have some effect on folks moving from California to Texas. In New York, it's 11.85% in the state. If you're in New York City itself, there's another 3.88% kicker. So I mean, they're getting close to 60% in New York City for folks, which is big deal, right? Oh, over half is huge. I mean, 43.4% is huge. But anyhow, we'll see if it gets passed. So when you think of what happened yesterday when it was announced, well, again, you could argue the market is at lofty valuations. I still think there's plenty of money to be made in the market. When you think of the things that are acting upon the market in 2021, you have the stimulus bill already passed and out there. You have the vaccine slash, increasing numbers of vaccines, which is getting closer to almost all adults, that sort of thing, or whoever wants it. We're getting close to that in April, maybe, might be May. So that in the opening of the economy, that's your second tailwind. Your third tailwind is the infrastructure bill, which also carries some corporate tax rate implications, but it's a tailwind for the market as more money flows in. And then the only headwind in 2021 is the taxation. So corporate tax rate was kind of promised that was going to go up, and it's probably going to happen in the infrastructure bill. Maybe it's separated out, maybe it doesn't. Now we're talking about the increase in the capital gains tax, which again was talked about before the election. So again, people voted for this, so they can't be surprised when it actually happens, right? So we'll see. And then really the real kicker is whether this trickles down to, if they say this is $1 million above, that's one thing. If it's people making 400,000 and above, well, that becomes more real for folks because there are a lot more people in that range. And then if they really take it down to a 200,000 above, that's kind of your upper echelon of your upper middle class folks that are pulling in that kind of money, and that's a big deal. So the reaction yesterday. So I guess there's two ways when you think of the capital gains things. Either people are going to try to sell now to lock in the 2020 capital gains. I will say if you're doing that strategy, you're kind of letting the tax tail wag the investment dog, which you should never do. You should take that into consideration, and you should take taxes into consideration always. You should do what you can to mitigate taxes within the current tax code. However, you don't really want to make your decisions based off of the taxes. So you've got that side of it, which would mean the market's going to sell off. And when you think of it, it's just like, well, I'm not affected, so therefore I don't have to worry about it. Well, that's not necessarily true, because you do have big players out there that are affected, which if they start selling in mass, that'll bring the market in. Yesterday was more of just a headline reaction. It was not any mass selling that I can tell, or that there's any market stats out on that, meant that the big whales out there are selling. That's not true. I think it's going to be a wait and see what gets passed, right? So there's that side of it, and so if you think that's going to happen and it passes, that would lead to some increased selling. However, the other side of that, and why I don't think this is a scary story as many other people do out there, is it means people don't sell. And if people aren't selling because of capital gains, and this, if you have a large, and I would say over $500,000 taxable account, there's some positions that, guess what? I'm advising folks, it'll be better to take these to the grave, right? Than to sell them. Because if you've been in Apple for over, 15 years, you're paying almost entirely capital gains on your position if you sell it. So there's times to trim and accept the capital gains. But for the most part, it's just like, well, we're kind of in this position for life. Right. So you stop all of the nonsense trading, the Robinhood team that's in and out, and the Wall Street bets and all this stuff that the younger folks tend to thrive on. Well, if you have a huge capital gain, it's I think we're just going to hold this forever unless you think the company's going under. So it helps you with that kind of buy and hold mentality. So in other words, two things can happen. So to summarize that comment, it could cause some selling if this gets passed, or it could actually reinforce a discipline of long-term holding, right? Of the capital gains get too high that you're just like, well, no, I'm just going to hold this and then pass it upon my death, where the value, the cost basis steps up. Now, if they start messing with that estate tax, I think everybody will freak out, but we'll save that for another day. All right. So what are we going to take a look at today? Again, the SPY VXX. The VXX is another way to play. The volatility spiked yesterday. I'll show you the chart here in a second. FMB. So if you want to get out of the market and go safer, you always can. You always can take risk off. FMB is your super safe play. That's municipal bonds. FIXD, which did sell off with that interest rate nonsense we had back a while ago. It's come back now and on the way back higher. And you have TLT and BND are a couple of big names out there. All right, contingencies and academic resources are standard. Let's take a look real quick at think pipes, and I'll show you where we've been. So even with yesterday's sell-off, get rid of that window. Even with yesterday's sell-off, look where we are, right? So we're still on this huge move up. 3 of the past 4 days are in red, and the futures are in green today. So again, it wasn't this big red bar. I mean, there's bigger red bars out there this year. So overall, I do think it was a nothing move off of yesterday on the move down. All right, when you take a look at the headlines out there, the biggest one as we go around the world, again, here's where we are, about even in the market. We could leak to a red day to day. Europe in the red across the board. Asia's mixed. There's our number. Well, they don't have the numbers from yesterday in there. I want to skip all the way over to crypto. Pretty big sell-off in Bitcoin last night. So again, that's going to hit Coinbase. That's going to hit a lot of different things. So just realize there's the 200 billion wiped off the cryptocurrency market, which is, arguably you could say it's all kind of made up. I got that. So we'll see. Other headlines out there. We do have the NASA launch that happened this morning on a reused rocket. That's kind of interesting. And then, of course, here's your 39.6 capital gains tax rate. Now, what I kind of didn't like personally is to fund education and childcare, right? And like Apex is saying in the chat, at some point you need to pay for all of the stuff we've already spent, right? So it's kind of ooh, let's raise taxes. It's like, yeah, we probably have to. I get that. But also now it's the note we're going to pay just for this. And it's just like, ooh, we need to pay for all that other stuff. So interesting. All right, we're about to the market open. So I'm going to switch over to TD Ameritrade and we'll continue our conversation on capital gains here in a minute. So here you're looking at the count for the TD Ameritrade chart. The longs and shorts are in the chat. We have skills, DM, OCGN there, and these are all longs because that's really what I'm focusing on today. The shorts are both related to Bitcoin, and I don't think it continues to sell off. So 10 seconds to the market open. Good morning, everyone. Welcome to the on time on target play of the day. A few seconds to the market open here. You have 4 screens in front of you on the TD Ameritrade Think Pipes platform. Here's the opening bell. We have the S&P 500 on the left. That's a 1-minute chart. So obviously the futures in the S&P are slightly in the green. You can see up here at the top. We have 3 longs to take a look at. Again, we're looking for that 5 to 10% long, heart of the envelope. Skills, the first play here is a Kathy Wood name. She bought a bunch of it yesterday, so that's kind of selling off. We'll see where that bottoms. We may be able to turn around and take that long. OCGN is a medical name that is out there. Excuse me, it's not. There's no news, but it was the highest volume pre-trading company out there but no news. And DMTK, that is the medical news company, early detection of melanoma. So that's why that is gapping up 5%. Obviously, you see it's got low volume, so you have to be very patient before you move in there. All right, OCGN selling off. So let's get rid of that and take a look at another couple names that are out there. Snapchat beat earnings. So there you can see it is gapping up significantly. You would have had to taken this right at the open in order to make the trade. I am liking this skills right here. So this is just profit taking. 1705 is the low of the day. Let's look at 1725 long. We'll actually pad that since this has fallen off so far. We'll go 1730 as our entry point here. But yeah, let's take a look at this. And this, again, just change the numbers there. So again, not a super great story for day trading, but if you want to take a trade, I will call it here. We're basically waiting for this to figure out where the bottom is. And then if it gets too much further down, we'll just say it's busted at that point, and we're not going to turn around and take it. All right, DMTK selling off. That's not really working either. All right, 16.8 is the low of the day. So that is, see if it holds. So 17.10 to the upside is going to be, it's going to be a 30-cent stop. So again, looking at a 17.10 entry, 16.80 as the low of the day for where our stop goes. Again, plenty of volume if you're looking at the volume down here. So Keep an eye on that. If it busts 1680, I'm going to move on. But if not, I like it. We're actually going to go 1705 and go a 25-cent stop. I do like the way this is acting here. Again, if it holds, if not, okay, we're not going to take the trade. So you can keep an eye on that if you want. Again, if you take the trade, make sure that your stop's below the low of the day, and then your entry point right now would be 17. But I'm not going to take it, but I will mark the chart for those that want to take it at your home game, because it looks like it's going to hit. So again, I'm not taking it, but those are your stops in case you do. And if that's the case, you're out at 1790 would be your upper stop, which is your 3R trade. So anyhow, there's a trade if you want it. I'm going to move on another screen over here. Let's look at Riot Blockchain. That was a short, selling off down to 8%. Let's pull up GBTC. So 6% or so down in GBTC. Remember, this thing was above 50. Now it's down to 39. So you got to ask yourself, there's your entry point on skills if you want it. You got to ask yourself, do you believe in Bitcoin? I do. I think it's getting hit right now. I would just say be patient. I wouldn't dump it. If you're hitting a stop and you want to get out, then do so. I wouldn't dump it right now. I think there's a big reset going on. I think a lot of the cryptocurrency world's starting to realize they have to pay taxes on this stuff too. So it's like the ooh, yeah, I'm a Dogecoin millionaire. Are you? But if you do, you're going to end up paying taxes on that. So just know what you're doing with the tax code out there. Okay, let's see other names. Mattel crushed earnings, MAT. Get that typed in correctly, MAT. So there, Mattel's a pretty good opening story here. Would have been sold off 22 down, 22.20 would have been that. Would have been 35-cent entry. Yeah, not quite a 3-hour trade there, but it has moved up some, nice and in the green. So that's Mattel. Not a bad long-term story, but again, they crushed earnings. Others that crushed earnings out there, Sam, which is Boston Beer. They beat earnings and are gapping up some, but a lot of red since they opened there. Again, not enough volume to really trade that name. Okay, there's the skills. We're going to move away from this, zoom out a little bit into the real world. So Mind Medicine up 45% this morning. I'm going to see what the headline is on another screen here, because that's a pretty big move. MMEDF to commence trading on the NASDAQ. So they're trading on the NASDAQ today. So you go from delisted to listed. So let's talk about that real quick and what that means. So Luckin Coffee, you know that story. LK was the old ticker, right? And then you went, it got delisted. Now it's LKNCY. Now, Mind Medicine here got listed. So in this case, it's going to switch the ticker. Looks like tomorrow or maybe later today, it's going to lose the MMEDF designation and go to MMED, showing that it's actually listed. So again, Mind Medicine really kind of focusing off on not just the marijuana story for medicinal purposes, but now going into the psychedelic story and the application thereof from things that, from the 60s, like acid and things like that, now used in a medical environment to try to help folks deal with some psychological issues like schizophrenia or bipolar or PTSD, even by, out-of-body experiences. This is kind of like, is it drugs? Don't do drugs. Or is this a way to unlock the brain, like a chiropractor can unlock your neck? There's a lot of the sorcery and witchcraft in this, but it's something that obviously a lot of money is going to flow into, because those are terrible problems. And if we can help solve them, even for some people, that's where the money's flowing in. So that is cool. They got listed. All right. And you see the obvious pop there. Let's just pull that chart so we can see the MM. I thought they fell off the leaderboard. I'll be like, that'd be quite the crash. So it's MMEDF. So getting some love after selling off pretty hard here. So a lot of room to go to the upside if you believe that story. Do not get in it if you don't believe in that sort of thesis, because that's, you have to hold that, right? Because you buy in and it's going to be all over the map. So like Luckin Coffee is largely, you just hold it for a, extended thesis. Here is same sort of thing. All right, VIP Shop up big. Nicola's bouncing off of an upgrade after being just completely hammered. BNTX, obviously that's a vaccine name. Talked about, I called this C Unlimited yesterday. I misspoke. It's C Limited is this company. This is a pretty small tech firm if you're interested. I don't hold it personally, but I have some folks that are hot on it in the book. Take a look and squeeze some in your portfolio if you believe. KWeb is your Chinese technology. That's up. Blackstone beat earnings yesterday. That was our story of the day, up 1% there. Trade Desk. Q Clean is your clean energy. And I mean, there's a lot of names that are up here. So let's take a look at, so the NASDAQ is up 0.5%, SPY's up 0.25%, and only the Dow is in the red today. So that's the storyline there. Well, only Dow and Bitcoin, right? So Bitcoin getting hit hard. CRISPR Therapeutics, I am actually a big buyer of CRISPR here. There's your coin. It's fallen below, I think it's down to 385, 390 range. Excuse me, 285, 290 range. So again, almost $100 off. So you're looking at, if you got in at the IPO or the direct listing, we're down, I think it's probably going to be over 20% today. If you can't take the pain, just hit the sell button. But generally, when folks are starting to hit the sell button, is the time to hold on. But you can see the, this is one of these, I'd like to wait for that first quarter earnings is what I'm asking my folks. If they crush earnings, this thing's going to rage higher. If they miss earnings, it'll be time to get out. All right. That is it for the ups and downs. Let's go back to the chart real quick to see if this would have held for skills. So again, that's where you would have gotten in. So it's in the green if you got in that. All right, but I'm not talking about that anymore. We're going to go back to CNBC and back to these capital gains rates and kind of close that discussion. So here's the current rates. So this is the, again, current rates for 2020. So I talked earlier about the 0%, 15%, and 20%. Now, when you get into tax planning and things, you go out of your way not to trip these next levels, right? Again, if you're single, you can do the math kind of on your own. Here about 40,000. Gosh, that's hard not to trip once you're out in the workforce, right? You're gonna probably be above that. And then 441 is a significant, wage. So you're going to know if you hit that. So for most of the single folks are going to be in the 15% tax rate. Now, if you're married and only one of you is working, then you can be below that 80,000, or you're in retirement and you're managing your income, so you aren't above that 80,000 level. Again, Social Security is taxed, pensions are taxed, so it's going to be tough to do that. But you might be able to stay under the zero. But most of us are in the 80 to 500K, as you can basically look at it. So again, above a certain rate, the kicker, the 3.8% kicks in. See if I can find that exact number while we're talking here. I want to say it's in the twos. Here you go. This investment exceptions, high income are subject to another tax, 250. 250 if married and filing jointly, a 125 if filing separately. So really this chart's lying to you, right? So 250 and 125. So if you go back to this, it really, let's do the married filing jointly, 80 to 250, you pay 15%. 250 to 500, you're paying 18.8%. So realize where that gets in if you're going to do a Roth conversion, or you have some ability because you're a small business owner like me. I'm an LLC, so it's flow through, so I can't manage it directly. But if I switch to an S Corp as part of the restructure this summer, then I do have the option to manage my income pretty significantly. So if you are in a business situation, you might be able to manage it, or you're taking a bonus at the end of the year. Some of your employers will say, you want it this year, you want it next year, right? So you may not load up during, you may take your bonus, kick it into next year because you're trying to do some other stuff with capital gains this year. Again, that's tax planning. That all has to happen before the end of the year, but generally that's my topic for almost everybody in December. So and realize that if it's short term, again, these are all long-term rates. If it's short-term gains, I'll get to that back here in a minute. Your question there, Burner. If it's a short-term gain, so obviously if you're day trading, you know all about short terms, right? So good news, you're making money. Bad news, you have to pay your full tax rate about it, right? And it goes all the way up to 37%. If you are a swing trader, you're still getting hit by this. So you have to hold it a full year. So when you go to sell something in a taxable account, if you're not used to going over to cost basis, click cost basis. It'll not only tell you whether you're up or down, but it'll also give you your holding period. And if you have a large position or a position that you've manipulated some, certain shares you can get into actually, so cost basis and then get into lot information. You can actually go in and sell specific shares. So if you have 1,000 shares of Apple, good place to be. You might go in and actually pick, okay, I want to sell this lot of 100 shares because that is now a long-term gain versus if you just do sell, it might grab shares that are not, tax lot optimized, if you will. Schwab automatically does a tax lot optimizer. TDA, to my knowledge, does not, but I know Schwab does, and I'm a Schwab now, and everybody's going to Schwab eventually. But you might want to go in and take a look at that if you're doing a major sell. If you're just doing a trim of a few shares to go buy something, well, you don't have to worry about that nearly as much. All right, Burner asks, is it 15% on the first 250K and then it's 18 of the additional? No, it's 18 for all. And this is, it's different from, and I'll restate that for everybody who can't see the chat. So a marginal tax rate. So we're not talking capital gains now. So I'm going to build the example from normal taxes and then talk to the capital gains. So say you are here, married, filing jointly. So if at the end of the day you are, and you're paying taxes, your 80,000th and first dollar is taxed at the next higher bracket, right? So this would probably be a better example. So with a marginal tax rate, say you're at this 8250, it's taxed up to 12% up to that point. And then if you go over that, it's only the money above that faces this additional tax rate, right? So that's that marginal tax rate form. This is not in the capital gains. If you trip over into the next capital gains bracket, all of your capital gains are taxed at that rate. So it's 18.5% for all if you go over 250K. So again, 249.9 in this case of and again, these are 2020 numbers, so 2021 a little bit different. But you're right, they're Burner at 249.9. Everything is at 15%. You add, another $1,000 and trip it, then everything, all your capital gains, which could be significant, right, are taxed at 3.8, right? Whatever the kicker is, higher. I see you have 3.5 there, but I think it's 3.8. Anyhow, yes, the kicker kicks in, if you will. So if that makes sense. So you definitely want to get in and kind of manage that, especially if you're looking at selling some stuff. And that's why, where is that number? That's why you really want to take a look at this before you pull the trigger on selling some stuff. There it is, 3.8%. So yeah, to modify your question, make it a little more accurate, below 250K, you would be at 15%, and above that, you would be at 18.8% for all of your capital gains. So you want to make sure you know what you're doing there. All right, that's all I've got for today. Thank you so much for listening in, and enjoy your Friday. Again, the Nasdaq's up 0.5%, good bounce from yesterday. S&P's in the green, and Dow's selling off slightly. So with that, you guys have a good weekend. The championship game for Texas, again, go Texas Longhorns, is tomorrow night. They do have a couple of championships in their belt. Kentucky, who they're playing, is an extremely talented team, so it's going to be a good match. Has never won a national championship in their school history in this sport, obviously. So yeah, should be a good match. So try to catch it, and we'll see you guys back on Monday. Bye.